What up, guys? It's March 14, and I want to go over this market alert, okay? Before we begin, of course, I haven't posted a video in a while. I find it hard to do videos about making money, being opportunistic, and sort of, reacting to these markets when the whole Ukraine situation is going on. Me as a veteran, I find it hard to watch. If I didn't have the responsibilities I have today, you best believe I'd be on my way to go volunteer and fight that war over there. I definitely would be doing that. But, looking at CNBC and everything that's going on YouTube, people are still reacting to the market. So I think it's the appropriate thing to do. It's just what I do. It's my hobby. It's what I like to do. So let's talk about this market. Let's go over everything. All the good, the bad, not a lot of good, lots of bad. So let's get to it. But before we do, please hit that like button, hit subscribe. Hopefully you learned something from this, just something little, and we have some fun in the meantime. Okay, let's get to it. So here we go. Here's the numbers for today on the markets. We have the Dow pretty much even on the day, 0.0%, 1 point up on the Dow. We're not too exposed to the Dow, so we don't care too much. S&P down about 0.75%. NASDAQ down over 2% on the day. Big loser. The NASDAQ and the Russell 2K unchanged. So if you guys remember my past videos, my portfolio is pretty much exposed to the NASDAQ and the Russell 2000. By the way, not to leave it out, the VIX over 30, that's an important mark. We've been over why the VIX over 30 is a hugely important technical factor as to whether you should be buying stocks or selling them, okay? We'll talk about that in a later video. But when it comes to the NASDAQ, let's go over the NASDAQ here. We see here a chart of the NASDAQ, and we're going to see that the NASDAQ is pretty much entered correction and bear market territory. More than 70% of names in the NASDAQ are already in bear market territory, well off their highs, well off their highs. So it's always worth taking a look in the NASDAQ in small cap value names like in the Russell 2000 to look for opportunities for companies that have secular growth trends. I'm talking about semiconductors, or some tech names, some software companies like a Palantir that is not dependent on how an economy does, well or bad. And that's what I'm talking, secular growth as opposed to cyclical growth. Cyclical growth meaning it's a stock or a company that depends on how the economy is doing. So for example, oil companies, right? Oil companies do well when the oil price is higher. They do bad when it's lower. That's cyclical. Okay, that responds to cyclical trends. Okay, so if we're talking about the overall markets, guys, we're reacting to a lot of bad, not a lot of good. Okay, so we got inflation, supply chains, Ukraine, Russia, the Federal Reserve, oil, China, new China lockdowns, guys, that are affecting mainly tech names. So lots of bad going on in this market, but the market is reacting and it's pricing in different things at a time. So let's talk about those things one by one. We'll start with the inflation reads here, and we're talking about producer price index, which is tomorrow. So we see that tomorrow producer price index, sort of like consumer price index, which already happened last week, will show us the rate of inflation for producers. No surprise that it's going to be hot. No surprise at all. Kind of like consumer price index, which came in a tad bit hotter than expected, but of course hot nonetheless. So this action here for producer price index for inflation should be priced into this market. Moving on, we have the Federal Reserve reporting on Wednesday, actually talking about their FOMC meeting regarding the rate of increase of the interest rate, the overall interest rate. What's expected is a 0.25% rate hike for the overall markets. So when this happens, I think the markets have already more than priced this in. The markets have already priced probably 4 to 5 rate hikes this year alone, and maybe a couple the year after. So nothing here should come as a surprise unless the Fed goes 0.5% or higher. That would come in as a very surprising rate hike. That would make us go lower on the indexes, as it gives the signal of a desperate Federal Reserve who's behind the curve. So hopefully it doesn't happen. Hopefully they just go easy. They're trying to navigate this inflation and higher rates, sort of like they call it the soft landing, trying to land an aircraft, when there's a hurricane out there, and trying to do everything they can to give a soft landing. We'll see if it happens or not. I have great faith in Jerome Powell, chair of the Federal Reserve. I think that he is on our side, on the side of investors, but that could change, so you never know. But at the same time, most of this action is already priced in unless there's a huge upside surprise from the Federal Reserve. Moving on, we of course have the Ukraine and Russia situation and the invasion of Ukraine. Horrible, horrible stuff. You guys saw the videos that I posted on Instagram, and there's a couple, they're all over social media, those videos and of the war and everything. Very, very emotional for me. I wish that I could be out there volunteering if I didn't have the responsibilities, if I wasn't a dad and, taking care of my house, my kids, my wife, my dog. If I didn't have any of that, I probably would go volunteer. That's just the way that I am. But in light of this and how the market interprets this stuff, I think that the most impactful thing out of this is the possibility of a nuclear disaster, right? We've seen news of Russians shooting at nuclear power plants and the staff shouting at them over a speakerphone, stop shooting at the nuclear reactor, right? That kind of stuff spooks the markets really bad because that has the capability of bringing a huge nuclear disaster. I don't think that nuclear war is priced into this market by no means, but in the latest, we know that it's already within the realm of possibility when it hasn't been for ages. So the markets have not priced this in. So we keep an eye on this and hope for some good positive news, maybe some ceasefire, maybe something that allows this to kind of cool down a little bit. I doubt that it will happen. One note though about here, how it says, Ukraine will knock 30 years of progress out of the Russian economy. I couldn't agree more. And this is because of the government taking over these businesses that are leaving the country. So, for example, McDonald's, we're closing all stores in Russia, right? And then Putin turn around and say, well, we're going to actually nationalize our McDonald's and have the government own the McDonald's. And who cares about trademarks? We'll still use the golden arches. We're still going to sell Big Macs, etc. That, I think, is the worst thing that Russia can do, is actually nationalize these businesses, because outside investors are going to be so spooked in the future to go back into Russia and invest their hard-earned money so they can gain business there, because there's always going to be that looming threat of like, hey, these guys may nationalize me, right, if something goes wrong. And their political climate is completely unstable. Their leader is completely off his rocker, and he will nationalize us and kill our business there. So they're essentially getting back to the Stone Age, to medieval times when it comes to a business mentality. And that is going to make Russian citizens hurt for a long time, their economy hurt for a long time. Not to mention that they haven't opened the MOEX, the Moscow exchange, still closed. And that right there kills all sort of investor sentiment. Just think about it this way. How would you feel if the New York Stock Exchange closed for 2 months? Would you want to stay in it? Probably not. You lose faith. And markets are based off of faith. And that is what Russians have failed completely in keeping, is faith for investors. Okay, now enough of that. We're going to talk about oil. Okay, oil's falling under $100 a barrel. This is good and bad. And let me explain. Okay, so we have WTI here, $98 a barrel. Remember, it used to be at 130. I was thinking about shorting oil at 130, and dang it, I didn't do it. So, man, I had the idea I need to short oil 130, and I was thinking of shorting Devon Energy. But if you guys know me, I don't like doing options. I don't like putting that clock on my head and not being able to sleep at night because that clock is going tick-tock, tick-tock on my head, hoping that the price moves your way. So for all you guys that do Tesla call options, that do, put options and call spread, God bless you, but it's not for me. I don't want that stress in my life. So I take a very chill approach to it. But of course, when it comes to WTI crude, good thing is it's going down. It means people have more spending power, and you don't have that demand destruction of other things because people need to spend more money on energy, on oil. Okay, the bad is the reason why it's falling today and why it's falling 4%. And that's because of China lockdowns. China's having another issue with their Rona, okay? And they're closing cities and provinces, being sealed off. This Rona zero policy that they have is just crazy. I think it's just too much. One person tests positive, the whole region goes on to lockdown. If you read the Macau news, it happens all the time. If you read China news, it's happening, and they're dealing with a big outbreak at the moment. So this is affecting regions that are imperative for tech supply chains, mostly semiconductors. So you're going to see semiconductors names getting obliterated lately, and I'll show you guys here in a couple when we're talking about the portfolio, a couple of names that have just been demolished. But it could end up being a buying opportunity because this thing hopefully doesn't last forever. I don't think it will, but of course China uses a more arcane method of controlling outbreaks, and thank God it's not here. Okay, so moving on. So to summarize all that, there's plenty of more bad in the markets, but essentially here, to summarize it, the Fear and Greed Index by CNN Business. This is a good sort of gear, like I've told you guys in a couple of the last videos, to look at where the market sentiment is. Of course, extreme fear by these markets, but this is where you want to be buying stocks, right? Not here. You don't want to be buying stocks there. You want to be buying them right here for the long term. So usually here you'll have these long-term opportunities get in your face so you can take advantage of them and buy furiously this market. Every single metric that you have here is pretty much an extreme fear territory. You see here over time, we're pretty much at an all-time low, or not all-time, couple, based on 2 years, we're pretty much at lows. You got 1, 2, only 3 times in the last, 3 years, it's been this low. So this is a good indicator for a long-term investor to be out there having a shopping list and actually executing on some buys, guys. Okay, now let me show you this other read as well. And I've shown this one a couple of times, which is the Ardeni Research forward PEs for the S&P 500, 400, and 600. Okay, so just to make it simple, the S&P 500, that's your big dog names: Apple, Facebook, Microsoft, all those guys, the FANG names. And then we have the mid caps and the small caps. Those are the companies that we're owning at this time in our portfolio. We care about those. We see here that they're pretty much at 10-year lows. Only about 3-4 times have they been this low. Actually, you see 1, 2, 3 times in 10 years have they been this low. So I think that it's a huge buying opportunity to get in stocks that are right here, and a forward PE of 13, under 14. Just insane. I think the big dog names still have a little bit to go, right? Not that much because they're so big, so effective, sort of like an Apple. But at the same time, how is there not opportunity here right now? I just see it as a moment of opportunity, so you can pull the trigger and actually buy names that you like. So that's a quick breakdown of what's going on in the markets. Now I want to show you guys my portfolio and today's move on the portfolio. And this is my entire portfolio here given to you guys as of today and today's leg down, right? We see here today's move as far as percentage move on the portfolio. We see we're getting demolished, and I'm putting it here from most affected to least affected here. Okay, we see PayPal eking out a 0.3% gain. Kind of crazy that PayPal is the one that the one gainer on the day. Okay, so we'll start with Tattooed Chef and kind of my thought about Tattooed Chef. So when it comes to Tattooed Chef, this is a long-term play, guys. So my position here, about what here, 1586. That's our cost basis for 470 shares. I'm checking here, 400 and where's my share count here? 470 shares, yes. So we hold it at 1586, currently 1033. Totally fine this stock being down. This is a long-term portfolio name because it still has a lot of growth in front of it. So don't be afraid to be down on Tattooed Chef, guys. Don't be afraid of it. If you guys like it, if you guys like the product, if you guys like the growth story there, just don't be afraid of it. Just add stocks as you see fit. Okay, I'm waiting for probably maybe under 950 to add some more to kind of significantly reduce my cost basis. So not in a hurry at all with Tattooed Chef. Now moving on to Palantir. We've been adding this one furiously under 11. So right now we have 735 shares for Palantir at a cost basis of 11. So we're currently down in the position by 50 cents. Totally okay. We love this name for the long term. We love it, love it, love it. So we're totally okay doing that. Everybody who wanted to panic, wanted to kind of panic sell in the stock is already gone. Already gone. If they want to push it lower, so be it. I'll get to 1,000 shares, 1,500 shares. No problem here. I'm in a great position in Palantir, so no need to panic there. Now, moving on to Wynn Resorts. Okay, so the story with Wynn Resorts is China, okay? The exposure to Wynn Macau, Wynn Palace. 2 properties that are in Macau. So we see here taking a leg down almost 8 or 7.5%. Ouch. on the day. We currently own 128 shares at 73.93. So we're down overall about 9.5% on the position. And let me tell you, totally okay with that. Let me give you a quick explanation here on Wynn Resorts. So if you guys see here, Wynn Resorts is trading at a market cap of $7.75 billion. To build all these casinos, it's about $20 billion. We're talking 4 properties in the entire world valued at $7.75 billion. Unreal. You're getting China for free. If you do a sum of the parts sort of breakup analysis on the valuation of the company, you're getting China for free, and you're getting parts of Vegas and Boston for free. Probably maybe 80%. You're paying 80% premium, not a premium actually, 80% of the real cost for Boston and Las Vegas. So Wynn Resorts, I think, is a buy any day, all day, under $80 a share. It's a buy. Now we're getting at a deep discount. Totally fine adding here, and I actually added recently to Wynn Resorts. Very small amounts because I'm all in this market, but it is a buy if you do not have a casino stock, a hospitality name, a travel name. Now moving on here, Teladoc Health. That's one of those big ARK Invest names, okay? And I didn't get it because it's an ARK Invest name, not at all. Actually, I'm happy that ARK let go of Palantir completely. Now the poison of Teladoc is complete. I mean, not Teladoc, of ARK Invest is completely out of Palantir, which I love. But when speaking about Teladoc, we're seeing here a business that's been completely demolished. If you look at a 5-year chart of Teladoc, we are buying Teladoc under what it was worth somewhere in 2019, maybe even 2018, guys. We're buying it at those prices. So totally fine buying this company when it's quadrupled, more than quadrupled its revenue over the last 2 years. And it is the future of healthcare with a great story, great growth. I mean, you see here, we have a 27% growth rate for 2022, selling at what, maybe, 5 times sales at the end of the day. So not worried about Teladoc at all. Totally fine being patient and picking up more Teladoc. We currently have 93 shares of Teladoc with a cost basis of $89.23. We've been demolished on that, but not as bad as other guys, and I'm willing to wait. So totally fine with Teladoc at this level. Now moving on to, this is my worst stock, I believe. That's Rocket. Okay, and Rocket, we have the special dividend coming up, in which we're going to get some money from that special dividend. We still have Rocket Solar, Rocket Auto, extremely cheap multiple name. I'm waiting until it falls under 10. Maybe I'll pick up some more when it falls under 10. Our cost basis right now is $19 for, let's see how many shares. We got 650 shares in the account for Rocket companies. Totally okay waiting for this. The market hates it. Totally fine. I just want to be able to reduce my cost basis more significantly with Rocket, and the special dividend should help us get some money to other stocks or even some more Rocket stock. That's $1 a share, $1. I think it was $1 and a penny per share. So we got about maybe $680, $700 coming into our account in 4 days. So if you own Rocket before March 8th, you're getting $1 special dividend per share. Good for you. Now moving on, we got Corsair Gaming trading at $17.79. I mean, unreal, guys. Let me show you guys this. We got Corsair Gaming trading at a forward PE of 15, and I think it's even lower than that at this moment because this company is just going to do better and better. The only issue is supply chains. That is the only issue here, and the cost of shipping, cost of shipping. That's it. Containers, boats. That is the only issue with Corsair Gaming. When that gets resolved, we're going right back on top and going over this valuation of $2 billion. So totally fine adding there. Currently, Corsair, $17.79, 500 shares at $26.59. Totally okay with that position. Now moving on, DraftKings, one of these ARK names as well. To some extent, I don't think it's as big as a ARK name as your kind of like Teladocs and Teslas and so forth. But you got to check out the investor presentation from these guys at DraftKings. This is a no-brainer 3 to 5 year play, in my opinion. No brainer. This business is going to get better and better and more profitable, more states. They're talking about the cost. The issue's always been the cost of acquisition of a customer. It's expensive to acquire a customer for these applications, but they do show you in the investor presentation how it takes about maybe 3 years to offset that cost and to really get these guys to keep playing, and ladies keep playing on these apps and adopting the app. And we've seen great adoption in Arizona, in New Jersey. We've seen how states start to become profitable after 5 years. They're still only active in about maybe 15 states, if I remember correctly. So a long way to go for DraftKings. A lot of growth ahead of it. Not worried at all. I love picking up shares here. Currently, we've been picking this one a little bit heavier than mostly everything else. 250 shares currently at $30 a share. We're down about 50% on the position. Totally fine. Totally okay. We're not thinking of selling this at any point soon. We're looking at increasing our ownership position and reducing our cost basis so we can be up 300% in the next 3 to 5 years. Okay, guys? So we go to Marvell Technology. That's the next stock. This is the newest stock in the portfolio. We've owned it before, but this is a semiconductor chip maker, 5G exposure, automotive. We also have phone. We have or Internet of Things, data center. That's the most important thing for Marvell at the moment. The data center is on fire. This one, watch it. It's going to get hit. I hit today for almost 4.5%, taking a leg down today. Totally okay with that because this is our newest position. I'm going to build this position little by little along with NXPI as our semiconductor play. So we have AMD, NXPI, and Marvell Technology as our semiconductor plays. Totally okay picking these up when weakness strikes. Remember, I always say you got to have semiconductor exposure in your portfolio. You got to have it. It's one of these hot secular trends, secular growth trends that will not slow with the economy. It'll keep going. We need chips, as many as we can get, okay? And these will sell at a premium when they need to. Now, Marvell Technology, we only have 30 shares at the moment. NXP, we have about 35 shares at the moment. Let me see here. Let me just do it. Yeah, 35 shares at the moment. And AMD, we have 88 shares at $82 a share for AMD. So we're up on AMD. We are down on Marvell and NXP. Totally okay with that. Now moving on, we're gonna go to Callaway Golf. That's one of my favorite stocks, and I don't have a big position with Callaway Golf, and I want it to go under 17. That's kind of where I am because I'm cheap, but it's all in a buy territory. Remember, all these are in a buy territory. So I've picked up some Callaway Golf when it's seen the 20s, the low 20s, just because I think it's just too cheap to ignore at this point. This is a $45 stock. Bank of America has named it a top pick for them in 2022 and 2023 with a price target of $45 a share. I think this is a $50 stock very easy in the next couple years. So I'm going to be picking up some more. I'm just cheap. I kind of wanted under that $18, $17 kind of range. I think that'll be a dirt cheap valuation for Callaway Golf. And this is golf entertainment. Nobody else is doing golf entertainment like Callaway. Not Nike, not Titleist, not anything. These guys are the lead, okay? Now, with Honest Company, this is one that's taken a leg lower, but totally fine. We have 1,000 shares of Honest Company. Totally okay holding on to that position. I'm waiting for them to announce their reporting date for Q4 2021. I look forward to seeing it. I think that the path to profitability just gets closer and closer, and it's right here. We get profitable and honest, and then we skyrocket upward. Hopefully sooner than later. Totally fine waiting for that, okay? We've been over NXP, AMD. Those are the semiconductors. Ford. Now, Ford is at a buy level, in my opinion. We hold right now 350 shares at about, 1288. That's our cost basis right now at 1574. I'd like for it to go under my cost basis for me to add more. I don't want to violate my cost basis here. However, if you do not have exposure to Ford, to an electric vehicle maker, Ford, I really like. I love their Ford Plus plan. You guys can look at my video for Ford. It's just a matter of patience, just a matter of kind of resolving supply chains. Everybody's having supply chains, even Tesla's having supply chains. So Ford is one that we want to keep our eyes on for a better opportunity. If you don't have exposure, though, you may want to think about it here, okay? Now, Planet 13, under $2 a share. Whew, nice, okay? Now, I want to get kind of maybe under 180 and just picking up a ton of shares because it's, you know, it's a penny stock essentially, guys, right? It's under $2 a share. So you can pick up a ton of volume of shares and feel really good about it. But at the end of the day, you want to reduce your cost basis. So if you have anything under $3 a share, just wait for a significant drop. This business is not going anywhere. It's doing great. It expanded here in Las Vegas. Maybe the California store still needs a little bit of an umph, and then some more growth plans in the Chicago, into Florida. Totally fine there. And then PayPal, that's one that we are in the house of pain on. We added too soon. That's a mistake we made for the account. Totally fine. Right now, currently we have, let's see, 65 shares at 163. You can see here trading at 96. But PayPal is a monster. It'll get better. I like their plan into going from mindless growth into more thoughtful growth and making customers more profitable for the business. I think they're going to do well in that. So just a matter of time. So totally fine reducing my cost basis there when I see the opportunity. It's under 100. I've been adding under 100. I think I'd last added when it was like 97, 98. So it's right around that range. If it takes a little leg lower, I might have to add, but looking to add significantly here. Okay, guys. So that's it for the account. And I'm already going on 25 minutes, so I don't want to go a lot longer than this. If you guys have any questions, please let me know. I'd love to go over more stocks, but at the same time, going over these stocks when they're already getting beat up like this, nobody wants to hear it, or at least I don't think anybody wants to hear my opinion on each stock individually. Right now, it's about adding, about being all in this market and not getting scared. Do not get scared, because if you look at this market 2 to 3 years from now, you're going to be regretting not buying at this moment. That's how I feel. I am all in. I'm dumping money into this market. Ask me if you guys have any questions. Reach me on Twitter, on Instagram. Reach me at the Stock Gladiator Discord, where we're talking about you know, all these guys selling and panicking and making fun of them, because later we'll be laughing, guys. Okay? Peace out.